Good morning, everyone. Welcome to the Foreign Correspondents Club of Japan, here in Tokyo, of course, Marunouchi. I'm Anthony Rowley, a former president of the club, and I'll be acting as moderator today. And this is the latest in what we call our series of deep dive events, in which we ask panels of experts to discuss topics of current interest. And I think today's topic fits into that category. We've entitled it "The Trump Impact on the Global Financial System" or systems. We have three experts here to discuss this issue, and I'll introduce them right away in the order in which they will be speaking. To my immediate right is Keiichi Aritomo, who is Executive Director of FinCity Tokyo, which is as many of you know, government and private sector organization formed to further the development of Tokyo as a regional financial center. I think it already has a strong reputation in that regard. I should mention that Aritomo-san is also chairman of the World Alliance of Financial Centers, which is relevant to today's topic. And to Aritomo's right is Satoru Yamadera, who is, let me just make sure I've got his title correctly, advisor in the Office of the Chief Economist and Director General in the Economic Research and Development Impact Department of the Asian Development Bank, the ADB, which of course is based in Manila. And to my left is Jesper Cole, who is a long-established economist and financial analyst, and he's also global ambassador and expert director at the Monex Group and an investment committee member of the Japan Catalyst Fund. Each of them will speak for 15, maximum 20 minutes, after which we'll have a Q&A session. I intend to hand the floor to them as soon as possible. Just by way of context, I would just note that financial markets and stock markets in particular appeared to have bounced back with remarkable speed from the Trump tariff shock, which I think prompts the question, was it all a storm in a teacup? Well, only time will tell, I think, as far as the long-term impact on trade is concerned, but that's not what we're mainly concerned with here today, because I think enough words have already been written or spoken on tariffs to fill a dozen or more books. What we want to look at today is the much less publicized impact of recent events on financial markets, stock and bond markets, and capital flows, all of which are of critical interest to investors. And one question is, whether the image of US financial markets, the Treasury market in particular, been dented to a point where it could cease to be the mecca of fund managers, and where rival markets and financial centers in Asia, not least Japan, and in Europe assume increased prominence for investment and fundraising. Well, I'm here not to answer questions, but only to ask questions, not to answer them. So let me hand over to our experts. First, can I remind you that if you have a mobile phone, a Keitai Denwa, please switch it off or put it onto manner mode as a courtesy to our speakers. So first, Aritomo-san, if you would give a brief introduction, please.
Yes, thank you very much, Anthony, for introduction, inviting me. I'm Keiichi Aritomo, Executive Director, and most importantly, I'm the co-founder of FinCity Tokyo, which is exactly 6 years old. But we started the notion of having this organization, public-private partnership, to promote and continuously upgrade Tokyo as a global financial hub was back in 2016 when Tokyo Metropolitan Governor Yuriko Koike was elected, and she formulated expert panel, including YESPA, and also chaired. She appointed Mr. Andy Saito as a chair, and Andy appointed me as a deputy chair because he was way too busy. wearing 9 hats or caps at that point, and already 78 years old at that point. It doesn't mean that he was old. He was quite energetic, but he wanted somebody to orchestrate the monthly working sessions. And Tokyo Governor Koike attended each one of those for 2 hours with undivided attention to the discussion. And we put together the strategy for Tokyo to turn around as a financial center. So that was the genesis. So even though FinCity Tokyo is exactly 6 years old, we started back in 2016. So it's almost like a decade since we started this initiative. And before I forget, Jesper tend to forget, he's also an ambassador for FinCity Tokyo. He tend to forget to mention about that, so that I need to keep on reminding. I was also, I'm no longer, but I was also the chairman of World Alliance of Financial Centers, represented by 20 plus international financial center until the end of last year. This organization was headquartered in Brussels and represented by quite diverse financial centers. However, the challenge was we didn't have big elephants in the room. United States and China. We had Hong Kong and Korean representatives, but World Alliance of Financial Centers couldn't convince US and China to join. And in a way, we were a bit hesitant to strongly persuade, because China said, if US joins, we cannot join, we don't join. And US said that, well, if China is involved, we don't want to join, or things like that. So we end up having neither of them. That was the World Alliance of Financial Centers. So I was appointed as a chair because they wanted to have somebody from Asia, because Asian market is growing and well positioned to represent the such international organization as well. So I'm not an economist like Satoru or Jesper, but what I do is to speak to quite a few LPGP investors across the world to, first of all, make them understand the current state of our ecosystem in Japan, and without any propaganda, and obtain honest feedback as to how challenging to invest into Japan as well. So, and then we put together policy recommendation to central government, number of different government agencies, including FSA, but also METI and Ministry of Welfare and Health, Ministry of Finance, etc. So those are the main things we do. So I can share my first-hand information from my direct interaction with global investors. Thank you very much.
Okay, thank you. Yamadera-san, if you would make your presentation, please.
So, can you show my slide? No. Okay, so I have to post it. In the meantime, so just let me introduce myself. I'm Satoru Yamadera, but actually I'm known as Tomo. When I was in United States as a high school exchange student, unfortunately my host parents couldn't pronounce Satoru, so they asked me to make up the nickname. So my Chinese character has a different pronunciation. Satoru is one, the Tomo is another. So I just made up my English nickname, and Tomo is like Tom. So it's very easy for American to remember. So in English world, I'm known as Tomo. Okay, so let me talk about the ASEAN Plus 3, which is sort of my responsibility under ADB. And I don't know how many of you knows ASEAN Plus 3. Of course, you know ASEAN, and of course, probably you may heard of APEC, but unfortunately, ASEAN Plus 3 is not so much well known at this point. But hopefully, in the future, you may hear ASEAN Plus 3 more often. And hopefully today's my sort of talk is briefly explain what is happening, and also in relation to the sort of under the global uncertainty, how ASEAN Plus 3 is trying to act. So that's just a short remarks for today. So what is ASEAN Plus 3? So ASEAN Plus 3 is ASEAN 10 countries plus China, Korea, Japan. We call it ASEAN Plus 3. The establishment goes back to the late 90s Asian financial crisis. So after the Asian financial crisis, East Asia, Southeast Asian country realized that some sort of a financial cooperation is necessary. And ASEAN Plus 3 initiated the two sort of actions. One is called Chiang Mai Initiative, and the other is the Asian Bond Markets Initiative. Chiang Mai Initiative is sort of the swap agreements by the member countries, and the ASEAN Asian Bond Markets Initiative is to promote the local currency bond market. Well, in the sense that the Asian financial crisis was caused by the heavy reliance on the USD short-term funding. So the Chiang Mai Initiative is focusing on short-term remedy. So something happens among the countries, we can sort of extend the short-term liquidity each other. And Asian Bond Markets Initiative is a kind of a long-term commitment. So changing short-term USD funding to long-term local currency funding, which is development of local currency bond markets. So that is ASEAN Plus 3. Well, ASEAN Plus 3 is a loose collaboration, but actually it has some sort of institutional framework to support the Asian financial cooperation. So the most important meeting is finance ministers and central bank governors meeting. It always takes place at the time of ADB annual meeting. So we just had it in Milan last week. Yeah. I'm sort of traveling a lot, so I'm sort of confused. Yeah, and basically, as I mentioned, Chiang Mai Initiative, now called multilateralization, so CMIM, which is supported by the ASEAN Plus 3 Macroeconomic Research Office, and Asian Bond Markets Initiative supported by ADB, which I'm taking as a kind of a head of secretariat function. Well, I'm not going to explain much detail, but there are certain sort of forums to bring regional experts, and those sort of accumulation of discussion is sort of elevated to the first task force is a kind of a directors level discussion, and deputies and finance ministers. So, well, of course, we need to prepare a lot of sort of discussions to go to the finance ministers, but once it is endorsed, that creates some sort of a push. Well, it's not legally binding, but of course, once it's agreed, that really creates some sort of direction to support this regional discussion. So this is ASEAN Plus 3, and as I mentioned, first ABMI. ABMI started early 2000, and we tried to create the local currency bond markets. And thanks to the efforts made by the member countries, as you can see, sort of an exponential growth of local currency debt markets. This is ASEAN plus Korea and China. Actually, the Chinese bond market is remarkable. Well, now China is the second largest bond market. It surpasses Japan, so it's really big. But equally, I really would like to highlight the growth of ASEAN bond markets. Well, in total, ASEAN plus China, Korea now exceeds the size of Euro area's Euro-denominated bond. Of course, currencies are different, but this is sort of the remarkable progress. And also, as I mentioned, China is second largest, but if we look at the ASEAN countries, particularly Malaysia and Thailand, their bond market is significant in terms of the market size, I mean, the economic size. So if we compare those markets with like a non-euro area, like Sweden, Switzerland, Norway, actually, the size of local currency debt markets in terms of GDP, Thailand, Malaysia, Korea is bigger than those European countries. So last 25 years, the region made significant efforts, and some extent, I hope, this regional cooperation initiative, ABMI, has contributed to develop these debt markets. Actually, this is quite important because if something happens, like a global financial crisis or COVID, those sort of countries can finance by themselves by issuing local debts. They don't actually have to come to ADB, or they don't have to go to World Bank, or they don't need to tap the USD offshore market, but they can issue debt and they can sort of conduct their own policies through debt issuance. So it's such a remarkable change comparing to 25 years ago. I also would like to explain the Chiang Mai Initiative multilateralization. Well, as I said, this is a sort of a kind of a mutual support arrangement. So the member countries agrees on swap, and if something happens, well, of course, most basically, Japan, China, Korea extend a USD to the other counterparts. And well, as you can see, the total fund size is 240 billion US dollars. And this is sort of agreed amount. So this is, so that if something happens, the crisis happens, of course, normally we go to IMF. But getting the funding from IMF may take time. So the Chiang Mai was initiated to create some sort of bridge finance before IMF coming. But there has been some various evolution. Well, first, we established AMRO 2011. AMRO is ASEAN Plus 3 Macroeconomics Research Office. And AMRO conducts surveillance. This is quite important. You know, before triggering some sort of liquidity support, and the most important things is to not to have these kind of shocks. So the surveillance is quite important, and we create peer pressure. And gradually, we agreed, not only USD, but also why don't we extend the local currency instead of USD? So that's another milestone we made. Of course, something happens, USD is more usable, but we are in a different time zone. And of course, we have high inter-regional trade. Comparing to other region, actually, ASEAN Plus 3 has a very high inter-regional trade share. I think EU is around 60%, and ASEAN Plus 3 inter-regional trade share is more than 50%. Actually, which is bigger than NAFTA. Well, I don't know. Now we have a big problem in North America, so we shouldn't. I don't know to what extent we can compare NAFTA, but at least trade side, ASEAN Plus 3 is very well developed regionally, and inter-regional trade is comparable to the EU. And so in that case, if something happens, still the local currency liquidity may be quite useful. Also, gradually, the Chiang Mai Initiative expanded the so-called IMF-linked portion. As I said, the Chiang Mai started from the bridge finance before the IMF comes in. But regardless of IMF comes or not, the region agreed, why don't we decide by ourselves? And the linked portion has been increasing. So as I said, we just had the ASEAN Plus 3 finance ministers meeting in Milan. So let me elaborate some of the key points. First, well, the statement you can download from AMRO's website or JMOF, Ministry of Finance of Japan's website, or other countries' Ministry of Finance website. And also from ADB, we run the portal called Asian Bonds Online, which I can show the QR code at the back of the my presentation, so you can get the entire ministerial statement. Anyway, so in the statement, the region really called for enhanced regional unity. Well, I think because of various global uncertainty, ASEAN Plus 3 member countries recognized or recognized importance of this East Asia, Southeast Asia forum to discuss various issues. But also, I'd like to stress that this region always hope and seek to multilateralism. So it's not the regional bloc. Often we say ASEAN and ASEAN Plus 3 is seeking open regionalism. This is a bit of contradictory wording because regionalism, in a sense, kind of inward looking. I think at the beginning of EU or in the single market, people had a concern of so-called fortress Europe. But this East Asian cooperation always seek for open regionalism, and we seek for the multilateralism. And we promote the greater intra-regional trade and investment flows. Of course, US and of course Europe are our very important trade partners, but we also understand that the various uncertainties involved, we may need to diversify our trade partners. In addition, we should seek for more intra-regional investment flows. Asia is actually known for very high saving. But when we invest to Asia, often the case that the money goes to US or offshore sort of Jersey or Cayman or those markets and coming back. So we want to create more sort of a direct linkage among ourselves. Also, last year, we proposed a rapid financing facility. And this time, we sort of tried to really establish the kind of faster liquidation. As I said, Chiang Mai initiative is a kind of safety net, but prevention, crisis prevention is the focus, like deposit insurance. Every country must have deposit insurance, and we promote. But actually, when it comes to the activation of deposit insurance, we really try to avoid. As you know, that's a kind of last resort. Like Chiang Mai, also, we don't want to activate. The prevention is the key. But given the various sort of increasing the risk, like a disaster risk, so the country agreed to establish a rapid financing facility for sudden exogenous shocks. And well, currently, the Chiang Mai initiative is agreements. So if something happens, the money comes from those countries. But they are discussing so-called paid-in capital. So why don't we have some sort of actual cash reserve so that we can provide the liquidity much faster? So these are really the outcome of Milan meeting. I don't know to what extent you are aware, but I think this regional discussion, particularly ASEAN Plus 3 finance ministers process, has been creating a lot of important milestone and important step for the regional financial cooperation. Well, given the global uncertainty, which is surrounding Asian countries, I think this ASEAN Plus 3 is quite interesting and important forum, and ADB continues to support this regional initiative. So as I said, please visit our Asian Bonds Online website. This has lots of information on Asian markets, particularly bond markets, and we try to disseminate lots of information through this website. Thank you.
Thank you very much, Amadeo-san, for that context. Very relevant, I think, in view of the fact that recent events have prompted at least some people to say, is Asia over-reliant upon US financial markets? And could there be alternatives in the form of regional markets, finance available from Europe or from Asia, especially if those areas can integrate their capital markets more successfully, which they are trying to do? Okay, well, let's turn to Jesper now for his
No,
expert
thank
perspective.
you very much. Very clear, sort of outline here, and it's quite interesting. If the topic is Trump's impact on financial markets, it's almost the exact antidote to what you've just talked about. You talked about multilateralism. Trump clearly is not interested in this. It is might is right, brute force, unilateralism, the reassertion of the United States as the global rule maker, and how you cope with that, whether you're ASEAN, whether you're EU, whether you're Japan, is your problem, not our problem. So it's quite interesting, that there is this big contrast here. Now, you also talked about uncertainty, and clearly, my God, it is this Lenin quote, sometimes, centuries, nothing happens, and sometimes, in a week, more happens than in a century. There's this wonderful quote by a Frenchman, and they do need all the support, particularly from me, like a German, not certain that everything is uncertain. Because what we do know after the first 100 days of Mr. Trump's fireworks have passed, what we do know is who his boss is. Because, the title of this topic here today is Trump's impact on financial markets. I think it goes the other way around. It's the impact of financial markets on Trump. It is very clear that the moment the US Treasury market started to, technical term, crap out, as they say in the trading world, when interest rates in America started to go up, the dollar was going down and US stocks were going down, which is sort of a red flag for any policymaker here. The moment that happened, the radicalism started to be toned down. Elon Musk bowed out of the government, and a sense of rationality actually started to come through. You've obviously seen this with the first of the trade deals slowly but surely being cut, and a very clear effort and a very clear signal who is boss. And the answer is that, yes, America's capital markets continue to be boss, and President Trump and his team, for all intents and purposes, is utterly beholden to the gyrations and the volatility in US financial markets. So where is the United States? And it's quite interesting to just, we want to talk about the financial architecture globally. And let's just be very clear that basically every 30 years, there is a redesign of the global financial architecture. We obviously had, after the Second World War, we had Bretton Woods. Then, give or take 30 years later, we had the end of Bretton Woods in the early 1970s. Then we had the Plaza Accord in 1985. There's a sense that, the global financial architecture needs to be redesigned. Well, that certainly is the ambition, of some of the policymakers. And that goes against the establishment and the institutions that have been built up over the last 30, 40 years. The Trump team, for all intents and purposes, wants to raise the efficiency of the global financial architecture, wants to raise the efficiency of multilateral agreements, and cut out some of the red tape that we all have to admit inevitably has crept into the situation. I will give one example, and I don't want to come across as a Trump supporter whatsoever, but let's just be objective here of what is it that you're trying to do. At the recent IMF World Bank meeting, the US Treasury Secretary Scott Bessent asking that the ADB stop lending on preferential terms to the People's Republic of China. Now, whether that's an anti-China statement or not, be my guest, but from an economic and financial architecture perspective, it's certainly time to actually start to consider that, just as Japan was weaned off from multilateral lending in the 1960s and early 70s, right? So it's quite interesting, I think, that, apart from all the bravura and the allergies and the trigger points that Mr. Trump always unleashes very, very quickly, the desire to actually shock the system and force a regeneration, a rejuvenation, ultimately may very well turn out to be a very positive thing, because I certainly think that the system is robust enough, to actually take the shock. And I think that, some redesign of the global financial architecture is actually very, very important. Now, on that, let's look at some of the issues that go beyond the institutional framework that needs to be reformed globally. And let's look at some of the new realities that have come through, largely because of technological innovation. For example, cryptocurrencies. You actually find that stable coins now comprise about 2.7% of all holdings in US Treasuries. Stablecoins have more US Treasury holdings than Germany or South Korea. This is a real new force. And, in terms of a new demand for US Treasury debt, as well as potentially other nations, other sovereign nations' debt, thinking about incorporating in a proper way cryptocurrencies, stable coins in particular, into the governance of the global financial architecture is something that we do need to talk about, and we do need to, discuss very, very quickly. So it's quite important, let's not just look in the rearview mirror. In the rearview mirror, there's plenty of room for institutional reform and making institutions more efficient. But over and above of that, you do actually have, new technology that does need to be incorporated, into the whole thing. The other element that, I think is, quite important, to remember is that, we got this lecture wonderful about the ASEAN and the desire to wean yourself off the dependence on dollar funding. Let's just call a spade a spade. Europe is very dependent on dollar-based funding. Almost 20% of Europe's financial liabilities are dollar-denominated in the euro bond market and the various structures around that. And, that is ultimately an unholy construct, because the ECB, the European Central Bank, is not the lender of last resort and is not the provider of liquidity. It is the Federal Reserve. And thinking about weaning yourself off that dependence is something that does actually have to be considered. So it's quite interesting. And the final point I wanted to make is, I've written about, with Trump's governance changes. And what I mean by that is that everything, if you're in financial markets, right now you cannot sleep, because there is a tweet that, will trigger volatility as opposed to the governance, right? It took over a year and a half for the Plaza Accord to be worked out amongst the G7 countries alone. Bretton Woods took almost 2 years, right, of the best and the brightest to actually sit in rooms and negotiate and come up with a governance framework here. Now what we have is governance by tweet, right? And so that obviously is unsustainable, because that is an issue of trust. And ultimately money is about trust. And think about it, my home country, unbelievable. We have a new government, a conservative government that is basically pro-American. And you've got one of the leading financial politicians, right, demanding that Germany considers whether it is still safe for Germany to have its gold reserves in custody of the Federal Reserve. Think about that. That is unbelievable, right? But that's the degree of distrust that has come about over the first 100 days of the Trump administration, and over the next 100 days, or over the next 1,000 days, or however many days are left, that trust need to be clawed back, need to be rebuilt, because it's very clear that, the dependence of the global financial architecture on the United States, the dependence on the depth and the breadth of US capital markets is not going to go away, particularly since it is exactly those US capital markets that are actually going to hold accountable the current president. It's the only thing that he actually listens to. Maybe he listens to his wife. He's probably a wise person. Final point, the role of Japan in all of this. And I think that, this capitalism that works, Japan is a system that, is very competitive, is perfectly free market, allows and encourages risk-taking, and creates an overall society that is remarkably resilient to all sorts of shocks, right? Whether they are natural disasters or whether they are financial disasters. Yes, you can worry about dollar-yen going back to 110, but I guarantee you that this is not going to destroy Toyota. They'll find a way, given the levels of reserves that they have, to actually not just muddle through it, but to actually come out stronger. And so the role of Japan in this global era of uncertainty, the role of Japan as a bastion of stability, as a country that continues to proactively promote in everything that they do multilateralism. Japan is not about might is right. Japan wants to be inclusive, and whether that is the ASEAN countries, whether that is Europe, whether that is the United States, and even the People's Republic of China. So it's very important, I think, that the role of Japan as a global stabilizer is actually going to start to come to the fore on that. And you obviously find that, God bless him, the world's greatest investor, Warren Buffett, as you know, he is retiring. And his last message and his last actionable point to the world is to commit more assets into the Japanese capital markets because of the value that is being offered here in Japan, as well as, the stability and the will to actually look forward here. So I think it's very, very important. I think that amidst this global chaos, and this, sort of uncertain age that has been forced, I think the role of Japan as a stabilizer, the role of Japan as a mediator, the role of Japan as Pax Nipponica, I think is going to get stronger. Thank you.
Okay, well, thank you, Jesper, for that usually incisive presentation. I should have mentioned that you were ambassador for FinCity. I didn't, but I think you've just made that point very clear. Okay, well, we'll turn to questions. But I would like to quickly, using my privilege as moderator, to ask a question of all of the panelists, which is, okay, we've had a crisis recently, the arrival of Trump, his Trump tariffs and so on. That crisis seems to have receded somewhat now, and financial markets are almost behaving as though nothing ever happened. So has the impetus for reform gone away or not? Or do you think that that Europe, of course there's no one here to speak for Europe actually today, but Europe and Asia are going to respond meaningfully to this challenge. I mean, they're both centres of enormous savings. And a lot of those savings don't go into investment in Asia or in Europe. They go abroad. They go to the United States or to Canary Islands or wherever. And a lot of it is directed back to Asia. But so now that Jesper has said that Trump has realized that financial markets are the boss, not him. So, as I say, has the impetus for reform gone away? And second part of the question on Japan is, we're seeing initiatives in ASEAN to unify capital markets, but Japan, I may be wrong in saying this, doesn't seem to be fully part of those. So, aimed mainly at you, sir, is Japan going to become more involved in these ASEAN moves towards integrating capital markets? So, Haritomo-san.
So, as I mentioned, I'm speaking to quite a few international investors. And most recently, I was in Miami to attend an investors conference. We had 3,000 people gathering in Miami, not because of its, to some extent it's because it's nice to be in Miami in winter. So we met with quite a few LP investors and GP investors, and I organized the Japan investment session. There are many sessions taking place simultaneously. So it's a competition of attention among the attendees. But Japan session was fully packed.
Who is?
Fully packed. It was crowded, oversubscribed, actually. So which indicate that there's a tremendous level of interest in Japan. To some extent, it's because of Trump, asking, reminding us about the key assumption of global dynamics, right? As Jesper mentioned, we believed in US dollars as the most stable currency, and mostly also the US was believed in to be a most stable economy as well. I think Japan is considered as the most stable economy and also most stable society. From a political point of view, I asked a question to the audience. Did you know that we had 4 prime ministers over the last 4 years? And how many prime ministers, how many presidents did you have over the last 8 years? They only had Biden and Trump. So in this sense, it's very different. And even though they only had 2 presidents, they experienced a pendulum going back and forth, dramatically. Most of the people outside of Japan even didn't notice that prime minister handed over to new prime minister, who is the prime minister, and some people still say, is it Abe? They cannot pronounce Abe. But did you actually know that he was assassinated? Really? So people started paying attention to Japan. So that's the reaction in the US. Now, they see, global investors see a lot of growth opportunity in Japan, largely because of the market reform and also JPX effort led by Mr. Yamaji, CEO of JPX, to enhance capital productivity of Japanese corporations. Issue is that we have way too many listed companies, as many as almost like 1,300, while in the US they only have 4,200 public companies. And 3%, top 3%, which is representing Nikkei average, basically, represent 67% of our total market capitalization as well. And then their business is not based in Japan, so they, actually we had, we hit the record high quite a few times last year. Nikkei was doing well. However, in terms of US dollar denomination at the spot currency exchange rate, we never hit the record. That the highest point was back in 2021 in January, when $1 was only 102 yen at that point in time, right? So that was actually the highest point in terms of US dollar denominated base stock market situation. So from an investor's point of view, the biggest challenge of investing in Japan is currency, because Japanese yen is one of the most volatile currency in the world in terms of the volatility of pairs. Over the last few years, Japanese yen is even more volatile than Argentina peso or Turkish lira. So it's almost becoming like an emerging market currency as well. So we have to stabilize JPY as well. With respect to the second question, if Japan is taking enough leadership, well, ADB is led by Mr. Kanda, Japanese, and Mr. Nakaso, our chairman, has been driving APAC, Asia Pacific Business Council's financial committee as well. So I think Japanese senior government officials are increasingly taking a leadership role, and Mr. Nakaso is quite passionate that carbon credit market is integrated across Asian markets as well. And because of Trump, I think Europe is getting more united, and especially Canada is more united. But in fact, I spoke with a few people in Calgary and Alberta. They want to be the 54th state of the United States as well. So it's not necessarily fully aligned yet, but largely more integrated. At least Toronto and Montreal, those are competing cities, have been not necessarily getting along, but now they are more integrated as well. So, and then, Asian market has been quite dependent on US dollar, especially ASEAN, but they want to wean off. This is the first time I heard this English, but they really want to wean off, and they don't necessarily fully trust China. So they don't consider China as a replacement or alternative for the US or US dollar either. So Japan's role is increasingly more important. And ESG, for example, or sustainability investment has never been politicized in Japan. We genuinely believe in the importance of achieving net zero by 2050. So we may be considered slow, but we are steady. And we don't change the policy despite the changing of the power in politics. But the transition is quite smooth as well. So that's I stop
Thank
here.
you very much. Okay, well, I don't want my question to dominate the whole debate. So, Yamada-san, brief comment or just...
Okay. So, two questions, I think. So one is the sort of whether, I don't know whether it's called the reform, but at least the question the Trump administration raised was the kind of question to the status quo and whether this continue or not. And the second question is position of Japan. So the first one, question to the status quo. I think we need to really think why these sort of, US proposal came up. The first, I think we need to realize that the existing so-called market mechanism of capitalism has some sort of a deficiency. And this was the basis. So we need to think how to mitigate those problems. Since development bank must sort of alleviate the poverty, we continue to do so. But let's say we also may need to admit the fact that the so-called climate change discussion probably focused too much on CO2 emission, and maybe there was some sort of how to say, the area which overlook the cost associated and which may create burden on the developing countries. So I think it is quite important. Let's say, just to take an example of climate change, previously we tend to focus what's green and the CO2 reduction, and probably we stopped thinking. But now what we need to do is CO2 reduction must lead to the reduction of fuel consumption, which also lead to the cost reduction and creates the economic benefits. And then we can make a more persuasive discussion. So we need to think that the what has been posed by the Trump administration, what was the root cause of those actions, and how we need to mitigate, and how we can fix the problem. Well, basically, I believe in market mechanism. And before joining the ADB, I was a central banker. I worked for the Bank of Japan. So I very much agree on the view that Jesper mentioned, that the market is sort of important, and that forced the kind of change of the Trump administration. I think to some extent that is true. And if we believe in the market mechanism, we also need to admit the fact that the people invest in USD, and there are reasons behind. If we want to change the system, we need to think why those are happening. And that comes back to the second question, the role of Japan or maybe yen. Well, the yen must have some sort of credibility. I'm not mentioning that the so-called yen's internationalization or yen will replace the USD, but I think we can consider some sort of complementary positioning or a supplementary position, which USD may not be able to provide. For example, the time zone. When Asia is open, US is closed. So if something happened in the international market, unfortunately, I'm not quite sure to what extent Fed can wake up in the midnight and agree to provide the liquidity. So in such case, yen may need to be the alternative of USD, and we may be able to create more sort of a stable financial system. If we can get sort of credibility, people may want to have some portion in Japanese yen. And desirably, we should have more sort of investment opportunities. People invest in USD because there are a lot of investment opportunities. We need to think to what extent yen or euro can supply those investment opportunities or not. Again, market is quite rational. That's my belief. But of course, that's not panacea. There are certain deficiencies, particularly in terms of wealth distribution. So we need to think how to fix it. And we need to sort of increase the efficiency of the market mechanism, which I think comes back to the first question, what was posed by the Trump administration, what we need to fix. That's my comment. Thanks.
Okay, thank you.
Just very quickly, I mean, as an investor, right, what I care about is I care about liquidity and I care about metabolism. And Japan is off the charts. If you look at, corporate metabolism, so mergers and acquisitions, management buyouts, IPOs, bankruptcies, it was wonderful. Right? For the first time in 30 years, Japan is becoming unstuck. And so you ask about reform. Japan doesn't need reform. Japan is now about action, liquidity, and whether you are a domestic investor or whether you're a global investor, the fact that you've got liquidity, that you've got turnover. If I want to put $10 billion to work in the next 2 hours, Japan is one of the 2 markets in the world where I can do this, both in equities as well as in fixed income. I cannot put $10 billion to work in Korea over the next 2 hours without, I will impact the price. So it's very important, that the benefits, the dividends of all the reforms that incrementally were taken over the last 20 years are now all coming through. And very important here, the Bank of Japan. Yes, Japan, one of the greatest experiments in financial socialism in economic history. Almost 10% of the equity market at one point were owned by the Bank of Japan. 60% of the government debt market owned by the Bank of Japan. 11% of the corporate credit market owned by the Bank of Japan. Now, Mr. Ueda, the governor, he has one mission, which is to re-privatize Japan's financial markets. And so they have stopped buying ETFs. They have stopped lending to zombie companies. They have cut back dramatically their JGB purchases. So it's a re-privatization, which for me, in capital markets, for me as an investor, creates liquidity. It's being privatized. And yes, there's some problems. There was this wonderful story where, how much was it? I think at the end of the year before last, at the end of 2023, Japan only had 14 JGB traders, right? And so, my God, the Bank of Japan stops buying JGBs. All of a sudden, where are all the JGB traders, right? And so there was a big, when you start an engine that hasn't run, for about 20 years, of course, there's going to be a little bit of a hiccup, but this re-privatization of Japan's capital markets, opening it up, and the government full on, and it doesn't matter who is the prime minister, the government full on supporting to develop Japan as an asset management powerhouse in the world. This is national policy. And as a result of that, you've got all the tailwinds that are coming through. You talk about reform. The only thing that needs to reform is the Chinese capital account. China has a closed capital account. China is not a global financial market for all intents and purposes. And the real question is, whether, with these Trump initiatives or America being forceful, whether China actually steps up and deregulates and reforms its own capital markets.
Okay, fascinating points, really, seriously. Okay, questions from the floor. The gentleman here, yes, first. If you could come to the microphone and identify yourself and put your question, please. And if your question is aimed at one particular panelist, please say so.
My name is Ron Nishi. I work with Nam Pacific Group. We're working in Japan together with Nakasa-san and his colleagues on some of the initiatives to assist in building Japan as a financial center. If you look at the global financial center wannabes, there's about 20 of them. But they all have the same problem, that they have no global financial assets. In other words, in order to be a global financial center, you have to trade global financial assets. And currently in the world, there's only 4 global financial assets. That's the dollar, T-bills, treasuries, and the S&P 500. In other words, what I mean by global financial assets, these are assets which are held in every global investor's portfolio. And therefore, to become a global financial center, you have to trade global financial assets. And all dollar financial assets trade in the US time zone through US institutions, and you can't displace them. But one thing that hasn't been mentioned, which I think is an enormous opportunity, and I'd love to hear your comments, is that if you think back to when we were young, there were lots of little local stores. And then along came the malls, and the stores disappeared, and we had the big malls. And then along comes Rakuten and Amazon, and the malls closed down. If we go back a century, there were 36 stock exchanges in the United States. Now there's 3 stock exchanges in the United States, 3 big malls, being replaced by interactive brokers, dark pools. It's all going virtual. And so one thing that hasn't been mentioned, which I think is a phenomenal opportunity for Japan, is DeFi. In other words, the constraints that limited Japan under this stupid Z-Yen ranking, the Z-Yen ranking of financial centers is like measuring transportation using horses. When cars come in, those metrics become totally irrelevant. And so one of the big opportunities, it seems for me, is DeFi to transform the engagement of Asia by Japan. Because one thing that stands out above everything else is Japan is trusted. Verbum meum pactum is the basis, as you were saying. Money is based on trust, and Japan has trust. So I'd be very interested in the comments by the speakers on their view of the impact or potential favorable impact of DeFi on Japan's role. Thank you.
Okay, thank you. Fascinating. Would you like to have a crack at that first? Or?
Yeah. Because it's broadcasted, I have to be careful to talk about the yen because I know a lot how it works. It's a great business. You can buy the ranking, and there's a lot of statistics, but it's based upon voting and who is voting. There are only 7 people in Japan voting, myself and my colleagues sitting there, because then we don't know how to vote. If you become a client of the yen, you are educated how to vote. And you can vote as many times as you want. You can hire interns or whoever. And then there are, Shanghai can vote, Beijing can vote for Shanghai, etc., vice versa. So, the point. So in this sense, it doesn't represent much. It represents and 50% people voters are from China and 20% Korea, and so and only 7 people from Japan. Nobody from the U.S. actually. No, U.S. doesn't care because they believe they are dominant. But we got to, but no matter how it is ranked, financial center is not competitive. Financial center is for what, right? The genesis of FinCity Tokyo or Tokyo Financial Center is our demographic challenge. We are the most aged society in the world. No, Japan is number 1. Japan is number 2.
Monaco. Monaco is older.
Older?
Yeah,
Is it?
and richer.
Oh yeah, they are rich. Well, no, but I think Hong Kong actually recently surpassed Japan too. So
It's not true. But anyway,
anyway, we have Hong Kong surpassed in terms of number of people above 100 years old. Yeah, so I think Japan is the kind of blue zone. Good thing about Japan is that ordinary people can live long. In the U.S., we don't have that kind of problem because only rich people can live long. I need to be politically more correct, but so financial center is to cope with our funding because we have a quite peculiar issue. People tend to outlive the wealth. People tend to live too long. Even not wealthy people will live too long. So how can we upgrade our capital markets or investment opportunity to be able to financially afford healthy retirement? So that's the purpose. So I think the way to measure competitiveness, there are many number of different measures, and it doesn't matter. We need to be clear what kind of problem we are trying to solve as well. Is this the question? What else?
DeFi, question of DeFi, the importance of DeFi.
decentralized finance.
Decentralized finance.
Blockchain.
Oh, yeah, DeFi. Oh, I guess my colleague and I went to Middle East last December and promoted Japan's investment opportunity, etc. But I typically do is shopping of shopping, not necessarily buying, but window shopping of real estate. So I looked around the real estate market in Dubai. It's booming, definitely. And I asked a question. There are a bunch of conversation going on in Russians and Chinese, etc. Most decisive buyers are Russians. And I asked the broker, how can I buy this and this, right? Pretended to be a billionaire. I'm actually not. And then I recommend not to use US dollars, right? And we are more than happy to accommodate, receive payment through Bitcoin. So I think, US-centric world is still very important because, foreign government reserve US dollars to represent 58% or so. It used to be 73% 2 decades ago. So it's a decreasing, but still the most important currency in the world for sure. But in the Middle East, people are trying to stay away from US dollars because it's so painful to be scrutinized and going through SWIFT. Never use SWIFT, and we don't recommend you to pay by US dollars. Those are the key messages from the major brokers in Middle East as well. So that's another side of the world, and we have to be aware. And Japan needs to, broaden our aperture to see what exactly is going on, not through the US, but we have to have our own eyes to understand what's going on in the world as well. So that's how I see it. DeFi would be actually important. So in this sense.
Okay, thank you. Yamada-san, do you want to make a brief comment on?
Okay, so well, first, it's not easy to define what's DeFi, but let's say technology is important, and Japan may be able to sort of harness that technology and create a new sort of financial transaction. I don't disagree this general statement, but we need to think through the reality. So actually, currencies are very much bound by the law and the regulations, and how to distribute those currencies must follow various regulations. Actually, technology cannot change law and regulations. Often I have a discussion with tech guys and startups, and they tend to overlook the facts and regulations. Well, the important point is this is more or less kind of tactics. It is very important to understand all various regulations related to financial transactions and make sure that how we can sort of overcome some of the deficiencies. And that's exactly what we've been discussing under the ASEAN Plus 3. So thorough analysis of different countries, different markets, and always there's some sort of common area, common ground that we can work on, and the technology may be applicable. So in that area, yes, I think Japan has some sort of a trust. The new transaction always requires some sense of trust. So if something workable in Japan, this may be regarded as a model, particularly in the context of East Asian, Southeast Asian countries, because the legal system in Japan is civil law country, and like Thailand, Vietnam, Indonesia, actually Korea and China is quite similar with Japanese legal system. So that's quite important. Of course, Japan is a bit slow, but once Japan can establish some sort of a transaction model that may be exported, actually the legal system is sometimes become very big impediments. People tend to think that the US and UK can be a model for financial transaction. Some extent, yes, but if you look at Europe, they always are struggling previously, because now UK is out from EU. So, but previously they struggle how to sort of combine the UK law system and the continent civil law system. Actually, that is happening in Asia as well. Again, technology is important. I very much agree, but we need to really think how we can implement and overlooking or ignoring those regulations that may be possible in offshore market, but that may not be healthy development. So that's my comment.
Thank you. Jasper,
For 30 seconds,
I'll time you.
I think that Japan will emerge as one of the powerhouses of decentralized finance actually being implemented. There are many issues. The key one is this libertarian, anybody anonymous can do all sorts of things. I mean, it's not your fault, it's not my fault. Basically, more than 90% of all the stuff that happens is criminal. Japan will pioneer the KYC, the Know Your Client, and you are already seeing with the integration and the changes in the My Number system that are being actually implemented, right? Next year there's going to be a big reform, right? And the database becomes actually available. So, when people talk about decentralized finance, they talk about, oh my God, it's the free Wild West and you can do whatever you want. Well, no. I mean, the key point about finance is trust, which means what? What if the transaction goes wrong, right? And in DeFi, when a transaction fails, who is accountable, who is responsible, can the police look under the hood, et cetera, et cetera. And I think that, the step-by-step developments that Japan is taking on that, are going to be a model of the world. Full disclosure, I have an interest in something called Japan Smart Chain, which will be a sovereign blockchain that has full KYC compliance and full integration into the legal aspects of what actually makes a society trustworthy. Thank you.
Okay, thank you. More questions from the room? Anyone? Or online? Do we have questions online? I don't think we do it. We have quite a few participants, but no questions. I would like to ask one more question. That is, within ASEAN, there are competing powers, of course. Singapore has long regarded itself as the sort of centre of excellence, if you like. But Malaysia is a competitor, and Indonesia increasingly is a competitor. So do you think this is a barrier to their moves towards an integrated capital market? In other words, they'll be squabbling for who takes the lead. And to Jesper, likewise in Europe, I mean, is Germany going to be the main motivator, driver of this?
Germany?
Well, or not, or who is going to be? I mean, again, you have 27 different capital market regimes, I believe, in the European Union, so there's room for a lot of dissent there. So what are the chances of a coordinated policy emerging? So Yamadera-san first, please.
Yeah, so if I give the impression that the ASEAN is sort of aiming to become like the EU, that's wrong, actually. They don't have any intention to be like the EU, and ASEAN plus 3 or ASEAN does not aiming to create the single currency. So the sovereignty is quite important, and each market remains to be different. Yes, it's not easy to come up with some sort of a consensus within ASEAN. There are a lot of difficulties when it comes to some sort of a regional decision. But I really would like to emphasize the sort of importance of ASEAN plus 3, because when ASEAN come to ASEAN plus 3, they tend to unite because they know that they are bargaining power. And ASEAN plus 3, China cannot dominate, because if Japan and ASEAN get together, even China may need to follow the decision. But of course, Japan cannot dominate the decision if China and ASEAN can unite. That's not easy. And even Korea, if Korea can bridge between Japan and China, they can leverage the position. So that's why I emphasize that the importance of ASEAN plus 3, unlike the other sort of a regional or other global discussions, no one can have dominance. And that's some sort of balance and even ASEAN may be able to unite under the ASEAN Plus 3 discussion. Again, market remains to be different, and no intention to create a single capital market. But of course, as I mentioned, there are some common area, and based on that, we try to connect more integrated market, although currency remains to be different.
Okay, thank you. Jesper, you want to add?
No, I mean, it's fascinating because, I mean, you know the Americans are fantastic. And they teach you things when you're young. And one of them was, never waste a good crisis. And, Japan, did not waste its financial crisis in 1995, 1996. They created an integrated financial regulator, the FSA, right? They created, a set of rules and regulation that applies to a homogeneous, very rich, entity. In contrast, Europe totally wasted the euro crisis, because there was no reform whatsoever on financial markets. There's no integrated banking law. I can tell you, when I was, running this ETF company, my counterpart in Europe, trying to sell, retail products, which were cutting edge at the time, ETFs, in the European market, it's worse than going to the dentist and having all your teeth pulled and putting them back in. Because every legislation, whether it's Holland, whether it's Germany, whether it's Switzerland, whether it's Austria, whether it's the UK, everything requires a complete, hiring of lawyers and accountants, because every regime is very different. In contrast, Japan is integrated. If you want to list an ETF here, you can. It's very easy. You can sell it to anybody. So I think that the European preoccupation now with its politics, and I speak as a German, and with the national emergency of having to build up after 2 generations of, politically correct, right, of being peaceniks, right, of actually changing society, right, towards being, as they say in German, kriegstüchtig, war ready, is going to, in terms of financial sector reform, financial sector leadership by Germany in the EU. I think it's the domestic social and economic issues that will absorb the bulk of the political capital and the bulk of the political attention. So get out of Europe, invest in Japan. Thank you.
Okay. Question? Yes, please.
Good morning. Thank you so much for...
Is the microphone working out?
Yes, I'm short. Good morning. Thank you very much for very profound insights and thoughts about what's going on here. I'm Keiko Tsuyama. I've lived in New York City for 20 years and I'm currently back for family issue. But inside out of the US, the stream of news stories are occupied with Trump tariff. So I would like to know, from a viewpoint of journalistic cycle, how and what will terminate this trade war or tariff war, and then the waste of time of news cycle. Thank you.
Gosh, that's a tricky one. Who's willing to go first on that? Jesper?
So the answer is that I think it's unlikely to go away. Because this obsession that these people have with, collecting revenues from global entities to finance a tax cut for Joe Sixpack, that obsession is going to stay. And still early days with the UK and not even China, but some of these deals that are coming through. You look at you actually read the primary documents, right? It's spooky because in the sense of that, is that something that is bankable, right? There's vague agreements, right? But there is 100% reserve that, the vagaries, right, of Mr. Trump, if he doesn't like something about the UK, for whatever reason, right, threatening to impose another round of tariffs, that probability is significantly above zero. You see what I'm saying? And so, the whole point about, trade is complicated, right? And it took the world economy the better part of 30 years to agree to the most favored nation principle, right? So that, and this is all being destroyed and focused and concentrated into a playing card for the Oval Office. So you're subject, right, to this risk at all times, which is very interesting. It's very, very interesting. It's scary, but from that perspective, I think, is it going to get away from the news cycle? Well, yes, but the answer is no at the same time, right? And watch what will happen now, because so far we've had 2 trade deals, effectively, right, with China and with the UK. And already China is complaining and moaning about that clause that the Americans put into the UK bilateral, right, that basically grants the United States the right, should there be, with third parties with the UK, should there be something that the Americans don't like, they allow the right to take punitive action against the UK. Amazing.
Yeah, amazing.
Louis XIV, l'État, c'est moi.
Fascinating, yeah. Yamada, something
Okay.
quickly.
Well, actually, this is sort of a question. As I mentioned, the Trump administration raising the question to the status quo. Here, status quo is free trade is the best, and actually nobody knows the answer. But actually, we need to see who really bears the cost of tariff, buyer or seller. Depends on that outcome is different. And when we see the outcome, then the U.S. government needs to think whether that is as expected or different result. So 90 days after 90 days, the actual sort of a tariff comes, and at least even a 10% increase, the basic tariff. This 10% needs to be borne by someone who bears the cost, U.S. consumers or exporters. So then I think we will see whether policy will remain or change.
Okay.
So I want to add a few statements. I also spend 1/3 of my time in New York City and 2/3 in Japan, and it's going to be reversed shortly. So I speak with quite a few investment managers close to Trump. And they like Trump administration very much because it's lucrative. So, Jesper said that who is the boss? Market might be the boss, but volatility is quite lucrative for people who are around him. To have some sort of a front runner or insider information. So market is turbulent and quite chaotic, but there are people who are benefiting out of it. Not everyone, but so in this sense, it's not necessarily a bad thing for Trump to have a market being so turbulent, you would argue there's a conflict of interest, but the interests are fully aligned among Trump administration people around him, right or wrong. I'm not arguing which is right or wrong. One indication, I have a son who goes to a STEM high school in New York City, which is known for scholarship. There's a number of different rankings, just like a ZM, right? One way to look at the high school is based upon number of students getting accepted by Ivy schools. The other one is how much scholarship they get, and my son goes to the other one. I kind of underestimated he was not smart enough to get accepted by Ivy, so I don't saved up enough money. I underestimated. He got accepted, but he didn't get scholarship, and then but nobody around him got scholarship from Ivy either. So and many of them either decide to carry on to state or SUNY CUNY in New York, but some of them decide to go back to their own country because it's no longer affordable at all. $80,000 per annum. That's 3 times as much as average household income in Japan. It's impossible. So I think brain drain is already happening, and at some point, I think billionaires around Trump might say, we cannot keep on doing this. We need to have those people to, maintain the competitive advantageness of those billionaire own companies as well. You want to say something?
On that, I have the complete opposite opinion. And again, I mean, Trump is a dangerous person to comment on because he immediately triggers an emotional response in one way, form, shape, or another, right? As an economist, whether you like it or not, these American protectionism will result in massive capital inflows, both on the productive capital side as well as on the financial capital side. Because, just look at the rate of returns, the opportunity set that I can generate. Warren Buffett has built a record war chest of cash, right? And how much the market has to fall. And it's the stock market, it's supposed to fall. If it doesn't, the stock market, you worry when it doesn't fall, right? To his point, I mean, volatility is very important, The question is the United States of America, from an investor perspective, right, going to continue to create the best opportunities, right, or not? And I think that given the amount of deregulation that is coming out, right? Given the still exceptional level, right, of ease with which you can set up a business, and it doesn't matter whether it's a yoga studio or whether it's a new crypto, this, that, or the other, or whether it's a quantum computing, applied company, right? You may not like the characters involved, right? But quite frankly, as a cold money person, the question is, where is the energy going to be created? And the energy that is being created in the United States of America, precisely because everything is up for grabs, precisely because everything is being unsettled, right? That as a result of that, I think you will be surprised, right? In my personal opinion. And there is no alternative. This is the interesting thing. The alternative could be the People's Republic of China genuinely opening up to the rule of law, transparency, accountability, and legal recourse. And that is not the case. China is great, and China has plenty of great companies and plenty of great business people and incredibly wise people and very cool artists, right? The question is to deploy capital in the People's Republic of China, right? It is not bankable, while the United States will always be bankable.
Okay, perhaps you should change your epithet from Japan optimist to US optimist.
No, this is not a zero-sum game.
Okay, well, unfortunately, we've come to the end of our time. I think we've raised some important questions and issues here, and I hope our experts have been able to answer at least some of them to your satisfaction. Okay, well, as is our custom here in the FCCJ, we offer 1-year honorary memberships to our guest speakers. To Aritama-san, there is your Yamada-san. Jesper has spoken here so many times that he has multiple memberships.
I got the
Way too many.
But please join me in thanking our panelists.
Thank you.
Thank you very much. Thank you.